Hey guys, gals, how's it going? Good afternoon. Hey Don, thank you to Amber for that introduction. So, looks like you guys can hear me. I can see the yeses, the highs coming through. So glad everybody could be here and joining us this evening or getting into the evening here on the East Coast. If you're joining us from the West Coast, more afternoon for you guys. That was one of the things I enjoyed when I was out on the West Coast for a couple years. Um, One of the nice things was when the market closed. It was 1 o'clock out there, so you still had all the rest of the day left to do whatever you wanted. And that's assuming that you were trading throughout the entire trading day. I mean, some people will trade for the first couple hours. They'll trade from 9 a.m. or 9:30 when the market officially opens, but they'll start their morning earlier and then be done sometime around 11 o'clock, maybe lunchtime. And so for those on the West Coast, you're done you start your day at 4 or 5 o'clock in the morning, but then you're done by 9 a.m. When everybody else is getting ready to go to work, you're closing up shop and you've made your money for the day and have the rest of the day to do what you want. So there was definitely that advantage to it, which was really nice. But anyway, kind of getting off the point here. Again, like I said, guys, thanks for being here. Really appreciate you taking some time to join me and discuss where the market is going and why. And we can talk. I want this to be an open discussion. Like Amber said, we'll have a Q&A at the end, but I do want this to be an open discussion. So if you guys have questions, let me know what they are, and if I don't get to them right away, I will circle back, or you can ask it again, and I'll be more than happy to answer it. So again, where the market's going and why. And before we really get into the charts and talking shop, just real quick, the disclaimer to get it out of the way. All it really says here, guys, is that it's possible to lose money. And if I'm being completely honest with you, right, if I'm being completely honest with you guys here, there are going to be losses, right? You're going to have losses on this trade or that trade. That's just the reality of it. But with the right education, with the right approach, the right confidence, this doesn't have to be a painful experience like it has been probably for maybe yourself up until this point, or for people that you've spoken to, experiences that you've heard of. So, like I said, yes, losses are going to be incurred along the way, this trade or that trade. But trading is not, right? Your success as a trader, your career as a trader is not going to be defined by an individual trade. You're not going to be remembered for a trade that you did on Apple, for example. Right? It's about what you can do over your career. You'll be remembered as that guy that had, 80 80 winning trades out of 100, or whatever the case may be. That consistency and that discipline is what will separate you from the rest. So again, like I said, will you incur losses? Yes. I mean, that's just the reality of it. But with the right education, the right approach, it can be far less painful. So with that, here is a picture of myself with my daughter, kind of help you guys to put a face to the voice on the other side of the screen. I always feel like this kind of helps it to be a little more real. You feel a little more comfortable asking questions. You can see who it is you're talking to, and it helps to create a more engaging conversation. So Amber already kind of talked about my background, so I'm not going to get into all of it. But basically, I've been involved with the markets for going on 10 years now. Thanks, Eileen. Um, we I've been in and around the markets for going on 10 years, as Amber said. Started with futures, got into equities, ETFs, and have since really started to focus more on Forex as well, which is kind of similar to futures, but a little more diverse. You have a little more flexibility, both in schedule and number of symbols to choose from. So it kind of is a nice synergy or blend of what equities and futures offer, kind of the best of both. So anyway, that's a little bit about me, and like I said, that's a picture of me. So now you know who you are speaking with. So for about the next hour, I'm going to ask you guys to just clear your calendar, maybe even a little less than that, just depends on the Q&A. But for around the next hour, I'm not going to take up any more of your time than that. We'll talk about what we're all passionate about, and that's trading. And it doesn't matter what you trade. What I'm going to talk to you about can be applied to anything, any chart on any time frame. So if you want me to look at it, give me the symbol after we go through the first couple things here, and we'll talk about it. Okay? So let me just take down this here for a minute, and you should now see this chart of the S&P. Can you guys see that chart? Yeah? All right. Awesome. So, like I said at the beginning, and why you guys signed up for this webinar in the first place, where do I feel the market's going? Right? Where is the market going and why? And I mean, look, I could take, this is, by the way, an hourly chart. I could kind of take a cop-out answer and say, well, the market's going sideways. And I honestly, if I came to a webinar only to hear someone say the market's going sideways and that's the bias to have right now, I'd be a little pissed off, to be perfectly honest. So I think it's fair enough to say we all know the market's been sideways, right? You've got this range here. You can see this is an hourly chart. Kind of got this wedge formation that's forming on the hourly. Here's the daily chart. You can see again that wedge forming. So in other words, the volatility is contracting on the S&P. The question is, where is it likely going from here? And it's not up or down. I mean, it's not that simple. And yes, Sandra, we are recording this, so you will be sent the recording if you have to cut out early. But I do encourage you guys to stay till the end because I do have a special offer for you guys. But in any case, we are recording this, so if you have some kind of internet issue, what have you, you will get that. So anyway, back to the market here. It really is sideways. So in the short term, you do have to be more tactical. You have to be more nimble as we navigate through this environment. But if we look at, and I'm going to come back to these shorter time frames, but if we look at, say, the weekly chart, you guys tell me, and I'm going to get rid of this here. You guys tell me, what is the trend here? Which way are we trending on this weekly time frame of the S&P? Overall, as you look at this, not over the last couple weeks, but over the course of 2016. You guys tell me. All right, yeah, we're going up, right? Everybody's in agreement here. We can all see that. So sometimes it's easy to get caught up in the day-to-day of what we do. And if we look at the day-to-day, I mean, just look at the last couple weeks here, right? The market's been in this sideways range the last 1, 2, 3, 4, 5, like 6 weeks. So over a month, almost 2 months, the market's been sideways. So it's easy, as I said, to get caught up in that day-to-day, which in a sideways environment like we've seen can translate to frustration if you don't know how to navigate through it, which, as I said, I'll talk to you about here in just a little bit. But it's helpful sometimes to take a step back and look at the broader picture, right? Because it can help you refocus on what's going on. So as we look at this, yeah, we've been in an uptrend. And if you look here, I mean, looking back at July, we started this move up. And we moved higher for the next several weeks, where we then came up and started basing here, got this drop. This drop really hasn't had any follow through. So the fact that that's had no follow through is the first indication that demand is strong. Then we had just last week this more recent drop, which so far has not had any follow through either. So we see this demand increasing, and if I extend this line a little more to the left here, we see that it's holding on support. Do you guys see that? Does everybody see this support that we're holding? Right? For those of you who it may not be so clear to, one of the rules that is fairly commonplace is that resistance, or in this case a prior high, once overcome, becomes support. In other words, the ceiling, once traded above, becomes the floor. So now that we've traded above this prior high, we're holding on top of it. The ceiling has become the floor. And that's what we're dealing with here right now. So bigger picture, this is in an uptrend. And with that in mind, my bias is bullish. So to just answer the question, where is the market going from here? Based on the information we have today, the market's going up. That's where it's going. Now, what will it take to really, based on the weekly chart, get things moving more decisively? Ultimately, it's going to be a break above, this area here, basically just under the 218 level. If it can get above that area, it's going to start to bring in much more demand, as it'll be clearing this going on 2-month consolidation. So that's an obvious level to watch. Now, if we drill back to the daily chart, here you can see these levels drawn once again, and that's the top of this range. If we can, and this is actually a discussion that I was having in the black room, which is one of our trading rooms that we have here at T3, but this is a discussion I was having in the black room. And what I said was, if we can get above on the S&P today's high, right? Today's high is 214.53. Yesterday's high was 214.64. So more or less a 10-cent difference between today's high and yesterday's high. And you guys see this moving average? This is the 21 EMA, right? So this is the 21 exponential moving average. And as you can see, we've basically gotten rejected both yesterday and today as we came up here. Does everybody see that? You guys see how this level has rejected price both times? So clearly this is a key level on a more micro scale. And I mean, I could drill down to the hourly and you could see that, but you guys get what's going on here. So the bottom line is this: if the market, if the S&P can get above this 21 EMA, and Mark's just saying here, it's punched through it in the past and failed, and that is true, right? It has punched through it in the past and it has failed, and that is the nature of a range-bound environment. Moving averages have far less importance in a range-bound environment. I mean, you can go back and look all throughout this consolidation. We've been above and below these moving averages more times than I want to count. So yeah, exactly. If you're going to use moving averages, you have to know under what context to use them. So I'm not suggesting to use them when things are just flipping back and forth like this. But when you start to recognize differences in what's been happening, they do become important. So not to go too far off topic here, but look at what happened over here when we got this breakdown, right? We broke down below the moving averages, and then we started to stay below it, right? As you can see, this 8 EMA was keeping us suppressed. Then once we got above it, we had this strong move higher, 2.5 day move to the upside. And then things kind of went all haywire and sloppy again. So when you break above or below these moving averages after they've been acting as either support or resistance, they do have value. So back to where we are here now, this breakdown on last Tuesday, right, put us below both the 8 and 21 EMA. And we have been staying below the 21 since that time. So basically like a week and a half, we've been staying below that 21 EMA. And every time we've come up to it, right here, last Friday, and then over the last 2 days, we've been rejected. So it is beginning to gain a little more traction or respect in the eyes of traders. So again, it's important to notice it here, not so much over here, but over here, yes. And that's part of being a disciplined, astute trader, is knowing how to spot these nuances. And then not only spotting them, but then knowing how to create a plan around it and act based on it. So, and that's what we do in the Black Room. That's what we do with the education that we provide to traders that come through our doors, is this game plan, if you will, and preparation to know how to act and when to act. So basically, if the S&P gets above this area here, it should propel the market up to the next level of resistance. So that begs the question, where's the next level of resistance? Right up here, right? This high that we were just talking about, where we can see, basically all these tops. So 18.5 or so, just to use round numbers, that would be the next level that we move up to if this gets broken. And then from there, we come back up to these all-time highs, and then continue on from that point, which is all in alignment with the weekly bias that we just discussed. So does that all make sense, guys? Yes or no? Now, somebody made the comment that we have seen individual names, Goldman, for example, Caterpillar, and others, which have had nice rallies while the market's gone sideways. And that's absolutely true. There's no doubt about that. And that's one of the beautiful things about the market, is that, there is always, generally speaking, always opportunity if you know where to look. And especially now, getting into, earnings season, there are going to be gaps each and every single day. I mean, you had American Express, Verizon, and others that reported. Microsoft did, I don't know if they're out yet or not, but Microsoft reporting today after the close. So with earnings season underway, I mean, quite honestly, it doesn't matter if the market is trending up or trending down, in a sense. I mean, look, if I had it my way, it would be trending up or down, because it's going to make the environment that much better overall. But when you've got earnings season going on, especially as a day trader, right, it makes things a lot easier. If you're a swing trader, it certainly could be more difficult, but even so, you still can find those bright spots. There's still opportunity out there if you are disciplined, if you have an approach that you're confident in, right? So let me show you here, just as an example, American Express, because I mentioned this one. So AXP, right, gapped up. Now, personally, I could care less about the earnings. I could care less about the earnings. Because to me, while that might add some color or help to answer maybe why traders are acting a certain way, it doesn't necessarily matter, at least in my opinion, the way I look at things. Now, I'm not saying that's the way that everyone looks at things, but to me, I want to know how the market's reacting based on the charts, because I've seen positive earnings that result in a gap down, and I've seen positive earnings that result in a gap up. So I have to go to the chart to really make sense of it. Okay? So when I go to the chart, I see the same thing that everyone else sees, but maybe my way of interpreting it is different. Okay? So we were trending down in this chart. This is again a daily chart. It was trending down. And by the way, there were plenty of opportunities to have taken advantage of this move down. But that's, for a different topic, different conversation. But, in the course that we teach, we do show you how to take advantage of not only this breakdown, but even this little pivot high that forms, this little pivot that forms right here. You could have taken advantage of that too. But anyway, getting back to what happened here today, we gapped up. Now, to just say that it's gapping up and I'm going to be bullish is silly, to be honest. I mean, that's naive to say. That's an uneducated comment if you're just saying I'm going to be bullish because it's gapping up. Because, guys, how many times have you seen a gap up fail, or a gap down fail for that matter? How many times have you seen that happen? You know, often, too many times to count, right? So we can't just say that. Right? So it's gapping up. I'm going to be bullish because what is it gapping above? Right? Look at this. Guys, you tell me, guys, what was this? What was this area right here that I just drew that line at? What was this area prior to the gap? And like I said earlier, guys, the more interaction we get, the more enjoyable this will be, and also the more you're going to learn, because if you're interacting with it, you're engaged with it, you're going to learn more from it. So yeah, everybody's saying resistance, exactly. So this was resistance, and like we just discussed, resistance once overcome becomes the floor. Right? So the ceiling once overcome becomes the floor. So I'm bullish because this is gapping up and clearing resistance. So the question now is, how do I get on board? And that gets into pattern recognition. Right? Maybe you're going to buy above a 5-minute bars high, or maybe you're going to look to play a pullback into support. Right? So here's a 5-minute chart, and let me just scroll this back. Right? You can see we got a 5-minute bottoming tail right out of the gate. It dipped lower, came down on top of that support, and you got a bottoming tail that closes on its high. That, from a 5-minute time frame, that was the signal that said, here it's going to go. So that was one example. And, there were other opportunities. You could have bought this breakout over the high of the day. You could have played this little pullback right there. There were other opportunities than just this one based on the patterns and the rules that we teach and cover, each and every single day in the room. In fact, speaking of the room, let me go back to the daily chart. This other symbol, you guys may or may not have seen it, but RIGL. This was another one, and this is a good example. This one gapped down, but it rallied higher. So kind of like what I was just saying, how many times have you seen gap downs fail or gap ups fail? So here it is. If you just said it's gapping down significantly, I'm going to short it, you would have gotten your head chopped off. So you have to have a more detailed plan than that. Okay, so it's gapping down. For one of the first questions you should be asking is, where is it gapping to? In this case, it was gapping pretty much to support, right? Right down into this support area. So that tells you to be looking for a trade either way. Wait the first 5 minutes of the day, 2 minutes of the day. See, is it strong or is it weak? And then let that guide your bias as to what you do next. And I bring this one up because the Black Room, they actually played this. I mean, honestly, guys, right out of the gate. There was a call out on this right at the open, right? So buy it 202 or over 202 with a stop at 195. Right? So you have a basically 8-cent stop, and then boom, there you go. Right? So this was again a play that was taken in the Black Room today for a nice profit, and then you could have even played it again later in the day. Right? You could have even played it later in the day here as this consolidated. Right? Boom, breakout. There it goes again. You guys all see that? Right? You guys see that? Awesome, awesome. And you know, there were other opportunities. DRWI was another one. This was another nice pullback. Offered you great opportunity. So, you know, again, just go to the daily chart, right? Gapping up above resistance, right? Everybody can see that, gapping up above resistance. So you buy the pullback. Right? And if I go to the 15-minute chart, beautiful pullback. This is actually a pattern that we teach. This is a pattern we teach you to recognize so that you can take advantage of things like this. Now, guys, I want to ask you, why did you get involved with trading? In other words, what is it that you want from trading? When you decided, you know what, I want to trade, whether it be full-time or part-time. Yeah, freedom, income, make good money, maybe some people doing it for retirement purposes. Yeah, I mean, these are the reasons that everyone comes to trading, that anyone does anything, right? Is to make a better life for yourself. Control your own destiny. Be your own boss. Set your own hours. Now, you may or may not be there yet, right? Those may be the reasons why you were drawn to trading, but you might not be there yet for one reason or another. It might be fear. It might be uncertainty about what you're doing. Maybe you don't have a trading plan. But how do you overcome those things? If you're second guessing yourself, if you're not yet where you want to be, right? Obviously you have to have persistence, but what do you have to do to overcome these things? I mean, you've got to find that guidance. You've got to get an education. I mean, it's the same thing with any profession. A doctor, an airline pilot, right? Any profession that you look to get involved with, right, requires an education, right? I mean, think about it. Are you going to get in a plane with somebody that's never flown before? Are you going to let someone perform surgery on you that's never been to school for it, never done their residency before? No, of course not. So why is it that so often people will try and trade without getting the proper education or guidance, or at least, if nothing else, surrounding themselves with like-minded individuals, getting into a community where they know they're surrounding themselves with successful individuals. And that's one of the things that the trading room that I'm a part of is all about. And I mean, if I answer that question, I mean, let's be honest. A lot of what's out there in this space is repackaged or renamed, but it's ultimately the same approach, which ultimately doesn't work, right? I mean, because if it did work, you wouldn't be here right now, right? I mean, guys, in all honesty, right, have you been to other webinars in the past, trading webinars where you've heard similar things, not necessarily in what I'm saying as far as how I'm looking at the charts, but have you been to other webinars in the past? Let's just start there. Of course, right? I mean, look, you would be silly to have not been at other webinars. And as flattered as I may be, if this was your first webinar, then I would almost encourage you to go and experience some other webinar just to see how much better what I'm talking to you about right now is, just in the way that I approach the market. And again, what I'm talking to you about right now, this approach can work on a daily chart, hourly chart, 15-minute, 5-minute, doesn't matter if it's equities, futures, forex. So what we're discussing here today is, in a sense, a one-stop shop. You don't have to learn this style for forex and that style for equities and then do that for something else, right? It's not built like that. But anyway, as you guys said, yes, you've been to other webinars before. And I've got to believe that in those webinars, you didn't hear what you wanted to hear, right? It didn't make sense to you. Because if it did, you wouldn't be here. You would be doing that, and you'd be successful, you'd be happy, and you wouldn't be looking for anything else. And so one of the things that we here at T3 offer is simplicity, right? That's what makes this work. And it doesn't matter, like I said, what you're trading, because I can bring up a chart of pound US dollar, for example, right? I look at it in the exact same way. Here was a nice breakdown. This is a 15-minute chart. I can go to an hourly chart. Beautiful little breakdown right here. In fact, I'm going to go to a daily chart. I'd have to bring up different software to show you, but I actually shorted the pound US dollar on this breakdown. I got into it a little early, but I shorted pound US dollar on this breakdown, and I actually still have some of it as we speak. Yeah, I mean, look, other webinars have high subscription fees. I don't know necessarily what high to you is. But I mean, the bottom line is if there's a fee for a service, the question is, does it pay for itself, right? Because there's always going to be a fee for something, and it's up to you and everyone here to decide if that is worth it, if it pays for itself. I mean, look, if somebody charges $1,000 for a subscription or whatever it may be, if that can turn into $5,000 in returns and more, isn't it worth it? I mean, it's like a trade, right? That's a lot. If there's anything that I've learned from trading, you know, you can apply these concepts to almost everything in life, right? I mean, you really can apply this to everything in life. So whatever the fee is, if I'm going to risk, you know, $1,000, whatever the number is, if I'm going to risk $1,000, if it's going to make me $5,000, $10,000, is it worth it? Right? If I told you to risk $1,000 on a trade and it could make you $10,000, would you do it? I'm sure you would. Right? So high is a relative term. It's not so much about how much it is, as much as it is about what it can do for you. Right? That's what it ultimately comes down to. So, do you teach reading the candlesticks? Absolutely. I mean, that is really the core of what we do, is how to read the candlesticks, because ultimately the candles are a reflection of human thought, and they're telling us a story. If we can read that story, then we can begin to see and feel out where whatever it is we're looking at is headed. All right. So speaking of, do we teach how to read the candlesticks? We absolutely, as I said, do. And we actually have a special offer for you guys here on the webinar. And I'll tell you about that here right now. So as I've spoken about, we have this trading room called the Black Room. 6 months of that room is basically $1,200. If you were to go monthly, month by month, it's a $1,200 value pretty much, right, if we round it up. You can get it today for $995. And with that, we're also going to include the course, the T3 Technical Strategies course, for free. That course is coming up November 7th through the 11th, and it does get recorded. So if for some reason you can't make it that day, it'll get recorded and sent to you. And even after the course, even if you are there, you're still going to get the recording sent to you so that you can review it, go back, hear it again, and continue to get these golden nuggets of information. And if you can't sign up right now, right, if you have to run, you can email info@t3live.com with the subject "Hold My Spot," and we'll have someone get back in contact with you. But this will at least reserve your spot and let us know, you know what, I'm interested in this, and we'll reach out to you. I'll be the instructor for this class, so I'll be the one teaching it. I'll be the one guiding the instruction for it. And by the way, you will also get a manual, an electronic manual sent to you, so that you'll have that to go through on your own pace, even after the course. You know, you can print it out, you can notate it, do whatever you want with it, but that's basically your textbook going forward, right? It's not like you're going to sit in the class, right? Virtually, of course. You're not going to sit in the class and see the slides similar to now, and then that'll be it. And then you have nothing to show for it. We're going to send you that manual too. And remember, you're going to get this course, this manual, for free just by signing up for 6 months of the Black Room, which is discounted to $9.95. So if you're interested in this, all you got to do is email info@t3live.com and we'll get in touch with you. We'll take care of the rest, and then we'll begin providing you with the actionable trades that you can begin to take advantage of, starting tomorrow. Um, who are the moderators in the room? Well, the moderators are Sami Abusad, who's actually going to be doing a webinar on Tuesday. So next Tuesday, he'll be doing a webinar as well. So he's in there. We also have Mark Harilla, Ifan Wee, and myself. So we've got 4 different moderators in that room providing you, trade ideas, entries, exits, stops, etc. And that room, the Black Room, is specifically for equities. I do both, Jim. So Jim's asking, do you trade or teach? I do both. On the trading side, I'm more, like Amber said earlier, involved on Forex. So I do more in Forex, but I do also teach. And as I said before, one of the great things about this method is it applies to anything. So it doesn't matter if you're trading equities, Forex, futures. What you will learn in this course can be applied to anything that you can chart. It's as simple as that. If you can chart it, you can trade it. I don't care what it is. And of course, I mean, the volume's got to be there too, but you get the idea. Mike, it's no different. It basically is the exact same thing. So Mike was asking, how different is it from the Pristine Black Room? Pristine and T3 merged, so it's effectively one and the same. It is the exact same room, the exact same approach, format, etc. If you want to open an FX account, you can reach out to info@t3live.com. They can direct you in the right path to maybe opening a Forex account and getting started. And so if you guys have any questions for me, I'm happy to hang around and answer those. Let me see if I missed anything further up the list. So somebody's asking, how many trades a day are there in the room? There are, on average, I would say at least 6 trades. I mean, it really depends on what's going on that day, but on average, I'd say around 6 trades are being called. Today they were looking at the RIGL. They were talking about the DRWI as well. AXP was on the list of things being discussed as well as others. I mean, you got to remember that there are upwards of 200 plus people in that room as well, and they're throwing out ideas in addition. So there's a community of people that are all contributing, and by being in the room, I mean there are more regular contributors that you'll get to know and see as well, who are throwing out their ideas. So it's not just the ideas or trade recommendations coming from the moderators, but also coming from the room members in addition. What's the difference between this class? It's this. I think you might be talking about the prop class. The prop class is for those who want to become proprietary traders, prop traders, and we do have a webinar for that coming up, I believe, the beginning of November. But we also have recorded prop webinars as well. Yeah, the one Sammy just taught, that's the prop class. So that class is a little more in depth and gets into some more detailed things along with specifics to prop trading as well. All right? And if anybody is interested in the prop trading webinar, you can email again info and we can send you that recording as well. Oh, okay. There's no difference, Mark. There's absolutely no difference. It's the same class. So basically, Sammy taught it last time. I'm teaching it this time. All right, so just looking back here through these. All right, so I see Amber's answering some of these questions as well. Another question here, are there watch lists in the room? And yes, I mean, so maybe it'd probably be helpful if I kind of gave you a punch list, so to speak, of what happens in the room. So basically, you can log in as early as you'd like, but the room is officially getting moderated, meaning that there's somebody on the mic, similar to you hearing me right now. There's somebody on the mic starting at 9 a.m. And at that time, what happens is usually it'll be Sami Abusad. He'll come on the mic and he'll be showing you his gap list. So he'll go through the gap up, gap downs, and basically create a hot list of the best ones up, the best gap ups, the best gap downs, and that will kind of be your focus list for the open, 9 a.m. Eastern. Right, that's what time it'll begin. So you go through that gap list with him, create the game plan, see what the market's doing. You have that hot list and you're ready to go at the open. And he'll be guiding you throughout the open, calling out different levels, different things that he's watching. And more often than not, the ideas, the trades are going to come right off of that gap list. So that is basically how the day begins. And that's the focus of the open. I mean, you got to remember, as you guys are, we're traders first. So from when the market opens until 10:30, 11 o'clock, the focus is on trading. Right? And then if you have questions, you can ask those questions, etc. But throughout this entire time, throughout the entire day, there are charts for you to see, and there's also watch lists. So long and short watch lists will also be posted for you to see kind of what is on the top of the watch for both long and short. to help you get focused for the afternoon as well. And that is also what happens coming out of the lunch break. So there's like an hour of downtime, and um, coming back from that lunch break, we set an afternoon watch list. So we look at relative strength, relative weakness, see what's going on in the market, and create that watch list for the afternoon, because what was strong in the morning isn't guaranteed to be strong in the evening or in the afternoon. Um, so we go through the scans and create a watch list for the afternoon. Is the gap trading mostly a day trading strategy? Yeah, for the most part it is. I mean, there are plenty of gaps that will or can be held throughout the day, and maybe have another half a day of follow through. So a lot of the gaps that do happen can be held throughout either the entire day or into the morning of the following day. But it is mostly a day trading strategy. And let me be perfectly clear about something else here, guys. It doesn't matter what your experience level is in trading. It makes absolutely no difference whether you are just starting out or whether you've been trading for, 10 plus years. This is a room and this is a class that is for anyone and everyone. Basically, if you have a passion and a desire to trade, then this is for you. There's no one, in my opinion, that this isn't for, especially if you've been frustrated with other things out there, if you've been frustrated by other approaches, other systems or methods. This, I think, is your answer, because it's simple. And that is, in a sense, why it works, is because it cuts through the crap and gets to what really matters, which is the chart. And somebody's asking if there's a trial to the room. Yes, there is a trial. We can get you set up with that as well. Again, email info@t3live.com and we can send that to you, or just simply request it here and we can get you a trial to that room. You can see what it's all about and, basically change your life for the better. All right. Does anyone have any other questions? So like I said, just to, again, recap the offer here. 6 months would usually be $1,170. You can have it for $995, and if you take advantage of this, you'll also get enrolled in the T3 Technical Strategies course, which I'll be teaching November 7th through the 11th. And with that, you'll also get the electronic manual sent to you the moment you sign up. So this isn't something we're going to kind of dangle out there. You sign up. If you sign up today, we'll get this to you immediately. This is something that you can have and begin to go through at your own pace, so that this way, when the course rolls around, you'll kind of have a step ahead of the rest. So it is in your best interest to sign up as soon as possible, so that this way you can get the manual, get in the room, and start assimilating the information. Do you have a charting software program with your company? No, we do not have a charting software, but we can put you in contact if you need to get in contact with a broker. We can get you in contact with the appropriate powers that be, and they can supply you with a charting package. How do you know that you've learned enough to be successful? Well, I mean, based on what I see the market doing every day, and the fact that more often than not, what I am expecting to happen and the trades that I'm placing play out as I plan them to. So, I'm not saying that every trade is going to work out, because that would be a flat out lie. And like I said to you at the start of this webinar, it's not about having every trade work out. If you're trying to look for a system or a method that's going to have you successful every single time, you're not going to find it. That's called the Holy Grail, and it's not out there. So I'm not trying to be right every time. I want to be right the majority of the time, and that's what this does. So look, don't misunderstand what I'm saying to suggest that you want to stop learning. You can never stop learning. You always want to be evolving and staying up to date with what's happening, because the market changes from one day to the next, one week to the next, one month to the next. But what I can assure you of is that this method will provide you with 100% objectivity, meaning that if you follow what we teach, you will not be caught off guard. You will always know what levels to be looking at. You will always know how to be prepared for what is happening on any given day. That I can promise you. Right? By keeping it simple, by keeping the focus on the charts, which is what really matters, it gets rid of all the other noise, which ultimately leads to pure confusion. Okay? All right, so we'll get you sent a trial, and again, anybody else that may want a trial, you can email info@t3live.com, or if you're ready to take advantage of that offer and get into the room starting tomorrow, again, email info with the subject "hold my spot." This will guarantee that we hold that spot, and we'll hold this offer for you as well. So with that, guys, I want to thank you for being here. Thank you for giving me the past hour of your time today, keeping true to my word, and we'll be getting out of here in pretty much an hour. So again, guys, thanks for being here. If you have any questions at this point, you can always email info@t3live.com, and we'll get back in touch with you. But otherwise, have a great evening, and hopefully I will see you coming up on November 7th and through the 11th, as well as in the Black Room. All right? So thanks again, and take care.